Okay, so we're going to get started with Chapter 4. And if you look at the title of Chapter 4, it says Posting to a General Ledger. But before we start talking about that, I want to talk about Section 4-1, which is called Chart of Accounts. Realistically, this almost could be something that is in the very first chapter, because when you create a business, the very first thing you're going to need to do is probably create your chart of accounts. The chart of accounts is a list of all the accounts that you're going to be using in your business, and it's going to be divided up into the different divisions that we've been using. So here's assets, liabilities, stockholders' equity, and then we have revenue. Now we don't have costs and expense. This is a little different, but we have expenses, okay? And ours isn't stockholders' equity. This is a little more of an advanced one. We will be getting to this, but we just have equity. And then, like I said, expenses, and then we have revenue. Now, we don't have quite as many accounts as on this, and we don't have this other stuff down here yet, but I just wanted to show you what a chart of accounts looks like. It's going to list all the accounts that the business is going to use, and then it's going to put a numerical number. Each account is going to have a name, cash, and an account number that goes with it, okay? And so this is just like I said, an example. Now, I'm going to go ahead and I'm going to do the work together on page 95. This is where I'm going to be getting the information. And I'm going to walk through how to do a chart of accounts, and then we'll talk a little bit about some things as I go. So the first thing you're going to do, and you guys, this is going to be like what your application problem is going to be. The very first thing you're going to do is you're going to put the name of the company. So this is Ross Company. And I'm going to go ahead and you guys can center this, or maybe I'll just leave it centered. And then you're going to start finding out as we make some of these financial statements. Usually we always start with the name of the company. That's always going to be on the first line. Then we always put what is the name of the financial report that we're making. And in this case, we're creating a chart of accounts. So I'm going to put chart of accounts. Okay, so now they have it broken up into two columns, and it's kind of like based on the accounting equation. Assets equals liabilities plus owner's equity. So guess what? We're going to kind of set our chart of accounts up in that order, I guess. And we're going to have some stuff on the right-hand side and some stuff on the left-hand side. So first thing we're going to do is we're going to start off with, and it's going to be called, and we'll talk more about balance sheets, but they call it balance sheet accounts. Now, chart of accounts, if you were to look this up online, you'd probably find a whole bunch of different ways that chart of accounts are created, and there's not going to be necessarily one exact way. This is the way that the book is showing it. You know, potentially there are other ways to do this, all right? But this is what we're going to go with. So our balance sheet account. So what's on the balance sheet? So just kind of like what I said, assets equals liability plus owner's equity. So that's all going to be on one side. Those are our balance sheet accounts. So we're always going to start with 100, and 100 is going to be assets. All of our assets are going to have accounting or account numbers that start with a 1, and then we'll talk a little bit more here. So cash. Cash is the most used asset, so it is going to be listed first. And since it's the first account, we're going to go with 100. That indicates that it's an asset. And then what we're going to do to allow us to have flexibility, instead of doing 1, 1, or like 1, 0, 1, we're just going to go 110. Cash is always going to be 110. And then from there, we're going to kind of go in alphabetical order. So then what I do is, again, to allow flexibility, what they do is they kind of space out things every 10th. All right, and then I'll show you what will happen. So our next account, and again, I'm getting this information from page 95, is going to be accounts receivable. And again, you're going to go alphabetical. So we've got, and they go by I think they go by last name, and I'm just going to do Megan Alvarez. Okay, then I'm going to go 130. So when you're creating your chart of accounts, you're going to do some what they call file maintenance, and that's creating your chart of accounts. And then again, you want to have flexibility because as your business grows, you may start doing business with other people, and some of these people that your accounts receivable that you're doing work for, they may go out of business, and so you want to give yourself some flexibility. So our next one is going to be accounts receivable, and it's going to be Tyler Link. All right. So then so we go from cash, then we go to accounts receivable, and then again, now we're kind of going out of order here a little bit because probably for the assets, they're kind of going with the accounts that are used the most. So they kind of start with cash, then they go into the accounts receivables, they put those in alphabetical order. Then the next one that we use the most is supplies. So they're just going to go ahead and say supplies is used. And they're giving us that, and then we're going to go down one more number here in 150, and that's going to be prepaid insurance. Okay, so assets kind of are based on like how much they're used and stuff like that. So that's kind of what you're going to be. Now this is the way we're always going to do it. If you only have one accounts receivable, then supplies would be like 130, all right? So you're just going to start with cash and you're going to work your way down. Then our next one is going to be the 200s, and that's going to be assets equals liabilities. All right, and liabilities again are our accounts payable, and our first liability is going to be, and again, these are going to be in alphabetical order also. So I'm going to go accounts payable, and it's going to be Mid-City Supplies. Okay, and then we have one more accounts payable, so it's going to be 220 because again, we're giving ourselves some flexibility, and that's going to be Surer Supplies. Okay. So again, this would be where you may not, this Mid-City Supplies may go out of business. So if they did, you would then delete this account and then you would start a new account. But you can't give an old account, you can't give a new account an old account's number, so you would have to come up with a new number. And so I'll show you kind of how that works here once we get this created. So the next, assets equals liabilities plus owner's equity, and the reason that they're calling this the balance sheet, we're going to be creating a financial report that's called a balance sheet, and the accounts that are included in the balance sheet are going to be all of these accounts, assets equals liabilities plus owner's equity. All right, so then next obviously is going to be the 300s, and that's going to be owner's equity. Okay, and this is going to be our owner's name, and so the owner's capital account is always first. So capital is always going to be 310, and then drawing, remember when we pay the owner for personal use, that's going to be second. Okay, so capital will always be 310, drawing will always be 320. All right, so now I'm going to go here to the other side, and we're going to call these our income statement accounts. All right, so again, we're going to be creating here in the next chapter 2 income statements, and we're going to be using our accounts that are on this side, which we're going to be up to 400 now, and that is going to be revenue. All right, and we only have one revenue account right now. We only have one revenue. We earn money by making a sale, whether it's for cash or on account. So that's going to be 410, and it's just going to be sales. Okay, so that's all we have. Then our last set is going to be our expenses. Okay, remember revenue, sales is how we earn our money, and then the expenses is the money that we spend in the operation of our business. Okay, so again, you're going to want to create this before, as you're deciding to start your business. You're going to sit down with an accountant or yourself in the bank, and you're going to come up with what accounts you have. And you're going to need to decide on what expenses. But again, it's not written in stone. That's why we're doing this going every 10th, is it's giving ourselves flexibility to either add accounts where we need, and like I said, you may end up deleting an account, but it gives you flexibility by doing this. Expenses are listed in alphabetical order. So the very first one we have, and expenses can be different from business to business, obviously, depending on what your business is. So this one has an automobile expense, and we always write it like that. Then we're going to go to 520, and this one has insurance expense, which is different than prepaid insurance. 530, then again, you'll notice that these are all in alphabetical order. Then we have miscellaneous expense. And then we go to 540, and we have rent expense. And again, you're going to be doing some assignments here, and they're going to not always have some of these same expenses. And then we're going to have supplies expense, which is different than supplies. These are two separate accounts, all right? So there's that. We've taken the accounts that they have on page 95 for the work together, and again, you can just look if you want to follow along, and they have them all mixed up, and then you have to put them in order of what the chart of accounts is supposed to be, all right? Then really quick, what we're going to do is we're going to come down here, and we have some new accounts. And so our new accounts are postage expense. So what we're going to do is you're going to look up here, and where would postage expense go? Well, postage is going to be between the M and the R. So our new account, then we're going to split that, and it should be 535. So the account number is going to be 535, and the account title is going to be postage expense. Now the other new account is utilities expense. Well, utilities can go right on here at the end if we stay in our alphabetical, so that then is going to be actually 560. So 560 is going to be our new account. All right, and then the last thing that they want, then the last thing they wanted you to do, and I really didn't have a way to put this on here, but we're going to have what are called ledger accounts, and I'm going to get into that here. And basically what you're going to do is you're just going to put the name of the account, and then you've got the account number. And I'm just going to do this one as an example, but because that's the last thing that it says to do on that. And I'll get more into that when we get into our journalizing. Okay, so this was super quick, but basically we have our chart of accounts, and we leave ourselves a tenth so that we have room for new accounts, we have flexibility. And the other thing is that, again, the 1 tells me that it's an asset, 5 tells me that it's an expense, and then the second number tells me where it falls within that category. So if I see 530, I know that that miscellaneous expense is the third expense account. Now that's not really important to anybody but the owners, but that's kind of what they break down on how they come up with these numbers, all right? So chart of accounts, that's what you're going to do for 4-1 application problem.